folks, Dan Frio here, the rate update. Today is September 13th, 2021. Good day in the market, and I got some good news. I finally was able to break down rents and how much that rent might be able to afford you if you're looking for a house. So don't go away. We'll be right back. Okay, so the first thing I want to do is send out there thanks to all you guys for watching my videos, reaching out to me by emails, calls, and everything. Has got a lot of realtors also calling me and saying, Dan, we want to be a part of your referral program. I'll give you a little bit more of that at the end of the video. But all I ask you to do is give me a thumbs up, subscribe down below, hit the bell. Every time I post a video, you get an alert. So let's get on to it. What are we going to talk about today? Well, I'm trying to do an in-depth analysis of this, okay? Should you buy? Basically, let's just look at it this way. Let's do a rent versus own, okay? And I watched several videos this weekend, and I'm going to debunk a lot of these videos this week. But what I did today is I ran what the numbers look if you're renting in Chicago, Illinois, okay? So this is a rent analysis of that. I'll post the link on where I got this information down below. But it says right now the average property in Illinois costs you $2,059 a month, okay? The crazy thing behind all this is right up through here. Average rents, $2,059. Year-to-year change, 7%. Average apartment size, 750 square feet. Okay, so that's all the data that I found. And again, today is September 13th, 2021. So I extracted this data and said, okay, how much could you afford with between $2,000 and $2,100 a month? So I did the analysis. I went in here and it said, and I played around with the numbers, and it came down to $300,000 with 3% down. And I'm going to talk about that in a video that I'm doing latter part of this week on down payment assistance programs we have. But hold on for a second. 30-year term, rate 3.25. The property taxes in Illinois are absurd. So I put in 2%, which is $6,000. That's probably about right. And if you're in other states, you're probably saying, are you kidding me? But no, folks, that is our real estate taxes here. The annual insurance premium is $1,200 a month. I basically broke it down to $100 a month. That might be even a little bit on the steep end. So when we compile all this data, it comes out $2,085 would be your payment, okay? So that's what we got. So the next thing is, you might say, well, I don't have $9,000 for a down payment. Well, I got some great news coming out latter part of this week. We have several, not just one or two, or IDA. Illinois has what's called IDA. It's a down payment assistance program. There's a lot of down payment assistance programs. You can go from a 750 square foot apartment paying $2,000 a month to possibly having the same payment and having your own $300,000 home. So those are just one of the numbers that I came up with right now. So what I'm going to break down latter part of this week, and I'm kind of trying to do it in a much more elaborate fashion, is to show you guys in several parts of the market. I'm going to say, okay, in San Diego, how much are the rents? Well, how much can you, based on that rent, how much can you buy? I'm not only going to do that, I'm going to try to link you to several different websites like this. And I'm actually trying to get it added to my website. So when you're on therateupdate.com with me, you can actually even check out homes in the area. But if you go to this value right here, $300,000 in Chicago, you can filter it through Zillow. And this is all I did. You can use 100 different websites, and I filtered it to Chicago, Illinois, from 100,000 to 300,000 home. This is how many properties are available. You can scroll through here and just see all these properties that are available for you to buy. Okay, so that's what I'm trying to piece together on my end, is to associate ourselves with realtors throughout the area, so we can refer you to those realtors to grab these homes, and also be able to do this on my website. So when you're putting in your information to get pre-approved, you can also, once you get pre-approved, go right back to our website and find a house that we can refer you to a realtor on. So that's the exciting news today, and these are the things we're working on the back end. But you're here to find out, Dan, what did rates do today? Great question. So let's get on to mortgage rates. We can see the MBS market was up 9. So what do we know for those that follow my channel? When the MBS market's up 9, what happens to mortgage rates? They go up. No, they don't. They go down. So that's what I'm watching here. So we have a nice little uptick today in the market. We had an up 9 basis points in the MBS market. Let me just explain to you how this works. So the MBS market is a bond that trades on Wall Street. As this number goes up, that means the price of the bond went up. When a price of a bond goes up, the yield, or in this case, your mortgage rate, goes down. Okay, so here's where we're at. You can see that last week on Friday, we had a collapse of the market. Okay, but right now on Monday, we have a nice little reprieve right here. So this is giving us what happened to the MBS market over the last quarter. Again, guys, when you see this is bad, real bad. If you go back to my video from this date here, and it would be right here. I don't know if I can get it there. I can grab it. 8-4. I said the market's oversold. Rates are too low. They're going to go up. And they went up. And then we stagnated. Last Friday, there was a little debacle in the system, but we're recovering. I expect us to run. We should be trading in a range right about here. Okay, why? Well, this is where all the technicals come into play. The 30-day or the 25-day, the 50-day, 100-day moving averages, plus Fibonacci levels run us right into that range right there on the top end. So I'm not going to go over all those technicals with you on a daily basis because people are like, Dan, you repeat yourself every day. So I don't want to do that. I'm just advising you. If you really want to get trained on these charting systems and all that, watch some of my previous videos. I will go in depth once a week so you guys can check out and figure out how all this works in the background. But basically, I just want to tell you the trends that are going on right now throughout the last quarter. Okay, so now let's see what happened intraday. Was there any major moves during the day that we should be aware of? Well, right at the end of the day, there was all kind of debacle. I just heard some rumblings. I don't know if this is true. I'm trying to validate it right now, that in China, there's a run on the banks. That could create worldwide havoc. So I don't know if that's factual, and I'm trying to dig in on that right now, but you can see a lot of green candlesticks here. I like the green candlesticks. That means there's a lot of buyers in the market right now for mortgage-backed securities. As long as there's more buyers in the market than sellers, we'll have the prices go up and mortgage rates come down. So what's the economic calendar for the week? There's really nothing that we have to worry about that I'm assuming. This China thing might be a big deal, and if I find something more about that, I'll send out a special alert. But one of the things the Fed watches is inflation. The CPI, which is the Consumer Price Index, is a gauge of that. What the Federal Reserve monitors really is the PPI, the Producer Price Index. That's not coming out this week, but they do take into consideration the Consumer Price Index. Then the next thing is employment. Okay, so the next figure comes out is the weekly initial jobless claims and the weekly continued jobless claims. My prediction is these numbers are going to start to get better and better and better every week as the excess stimulus packages start to come out of the system. So meaning if you're out there and you're getting the extra benefits, or we're getting the extra unemployment benefits, those are going to go away, and it's forcing a lot of additional people back into the workforce. Friday, we had a JOLT index, which is job openings throughout the country. There are more job openings now today than there were ever in history. There's over 10.9 million job openings. I talked to 2 manufacturers this weekend, and they're both saying, we pay top pay, and we still can't find employees. So that is factual. I'm not going to tell you the companies I spoke with, but those are national or international manufacturers. One's in Colorado and one is in Maryland. So what happened today with rates? So here's what we're seeing. There's really nothing that the +9 really isn't playing any role in this. As you guys follow me every day, you notice that I say we need this number to really change about 10 basis points. But let's go over the 30-year conventional or 30-year rates for today, issued by Black Knight. Black Knight is a survey company. They send out surveys to mortgage lenders all over the country. These are not my rates. These are the national averages. So they go over the 30-year conforming jumbo FHA and VA rates, and those are right here, okay? 1 day, 7 day, and 4 week delta. We try to see, is there a pattern here? Okay, delta means change. So 1 day change, 7 day change, 4 week change. You can see 0, 0, 0, or 2, 1, 1, 3, 7. What is 1 basis points? Well, in numeric terms, it's 0.01. So virtually nothing. So you're not going to see any changes there. I do have a thing that I want to reach out to you guys. Any realtors out there, if you're looking to partner with us anywhere in the country, here's what we're doing. We're doing my YouTube videos taking off thanks to you guys. If you can help push this, share this, or whatever to get more viewers, I'd appreciate it. But if you're a realtor anywhere in the country, please reach out to me if you're looking to get some referrals. Okay, all we're doing is I'm sending out, if we get any pre-approvals from the system, from my YouTube videos and all the other stuff that we do to draw in new home buyers, what I want to be able to do is refer that buyer to an agent anywhere in the country. So I need you guys, you realtors out there, to reach out to us so we can put you into a database. If we get somebody pre-approved in your area, we'll reach out to you and give that lead to you. No strings attached. We just want you to take care of our clients. And for you guys watching our videos, that's our thank you back to you guys. How you find out more about me and my team? Well, just go to therateupdate.com. Take you right here. You can apply online. You can do that right here. A lot of people are just like, I just want to kick the tires. I need to talk to somebody. So if you're not wanting to call in, you think you might be pressured in some way or another, just click here if you're looking to buy a house or refinance. This will ask you some questions based on the answers that you provide. It helps us guide you down the right path to the right mortgage, right program, and so forth. So we can email back and forth with you this way. But if you'd like to talk with us, please call. Give us a call at 844-775-LOAN. Or what a lot of people are doing right now, they're scheduling a one-on-one appointment at the time that's convenient to you. So you click that, it'll pull up our calendar. You click that, it'll give you the days and times available that we have available. I have 10 loan officers on this. Many of them I do, but most of them I don't. But I'm even involved in some of the conversations when they do a conversation with you. You can elect to do this either by phone or by Zoom. I love Zoom because I like seeing you guys, meeting you guys. It's the most personable way to do it without being truly face-to-face. So that is it for today, guys. Thanks for watching. This week's going to be really informative. We're going to go over some down payment assistance programs we have available to you and much, much more. So thanks again for watching. God bless and have a great night. I'll see you tomorrow. Bye-bye.